Ladies and gentlemen, good afternoon, and welcome to Snam 2019 first quarter results presentation. In the first quarter of 2019, we achieved strong results. EBITDA was up 4% thanks to the increase in regular update and higher tariff RAB, and the further effect of circa 1 million related to our efficiency program, which has been launched in 2016. Net income was up 11% thanks to lower interest costs deriving from the positive impact of the liability management exercise carried out in December 2018, and second, continuous treasury management optimization. The solid income from associates of euro 62 million, mainly relating to Terga, that include one-off items of 6 million related to the release of a tax provision accrued in 2017, and DESFA, which was not part of the perimeter in 2018, and whose revenues are in part linked to capacity booked. CapEx was up 6% and is in line with circa 1 billion euro for the year. Net debt was down 3%, which is expected to be confirm all the full year 2019 guidance provided in March. As well as delivering solid financial results, in the first quarter 2019, we've made good to invest in our core business. We've increased by 15% our performance in regulated services versus the first quarter of 2019. Regarding storage business, at the mid of May, we booked more than 98% of storage in 4 BCM. With an increase of 4% versus last year. At the end of March, the regulator released the final resolution on the 5th regulatory period for 2020 to 2023 for the transport business, confirming the beta and therefore a WACC of 5.7%. We are continuing our effort in the energy transition. We are exploring the possibilities offered by hydrogen. In March, we introduced a 5% hydrogen and natural gas blend into a segment of the Italian gas transmission network, serving 2 industrial companies in the Salerno area. This test is the first of this kind in Europe. We have signed a contract with Tamoil to build the first set of 5 CNG filling stations. TEP is progressing well with its offer in the residential sector, and the first quarter is as contractualized circa 5 million euros of orders relating to deep renovation of residential buildings. Finally, in the first quarter 2019, we have completed 7 new connections to our grid, 3 related to biomethane plants and 4 to CNG stations. We have continued to create value from our financial structure. In February, we launched our first climate action bond, which will be used to finance our green investments, as well as reducing the environmental impact of our core business. In March, we increased the size of the Euro commercial paper program approved on the 2nd of October 2019 from 1 billion euro to 2 billion euro. Looking more closely at the numbers, EBIT in the first quarter was 366 million euro, up 11 million over the same period of prior year. This number reflects the increase in regulated revenues of 15 million, mainly due to WACC update and the increase in tariff RAB for transport, and a slight decrease on storage due to some fully amortized assets exiting the RAB. The reduction in controllable fixed cost of 1 million, despite the inflation effect, mainly thanks to the ongoing efficiency program. The program, which has a target of 60 million as of 2022, has obtained a further 1 million on top of the 36 million reported at the end of 2018. Depreciation and amortization increased by 9 million euro, reflecting a growing asset base. Other components include positive effects from the release of provisions and some costs relating to the integration and ramp-up of the new non-regulated businesses. Net profit in the first quarter 2019 was 2,283 million euro, up 29 million euro over the same period of prior year. This number reflects lower financial charges thanks to the full effect of the optimization measures implemented in 2019, including the last liability management exercise completed in December. Treasury optimization namely commercial paper and short-term uncommitted lines, and natural bond rollover with the expiry in January of 500 million bond 5% coupon replaced with a new bond with a coupon of 1.25%. The good performance of our associates, mainly driven by 6 million of one-off effects related to the release of a tax provision accrued in 2017 by Teréga, and DESFA results that were not part of the perimeter in 2018 and benefit from the growing demand and are impacted also by the seasonality of booked capacity. The new regulation is expected to be released in the next month. Income taxes are higher than the same period of 2018, mainly because of the higher earning before tax and the abolition of ACE benefits. Full-year tax rate is expected to be around 26-27%. We are on track vis-à-vis our full-year guidance provided in March. Cash flow from operations was 836 million euro, thanks to the solid net profit and positive working capital of 431 million euro, that includes 151 million euro of tariff-related items, of which 57 million euro are due to overcharging to be reimbursed over the coming years, and 94 million euro of additional tariff components expected to be reabsorbed within the year. 91 million euro of balancing activities expected to be reabsorbed almost entirely within the year. 102 million euro due to the next net tax payable accrued in the period that will be paid in June. 67 million cash from the equalization fund that will be repaid to shippers in the following month. Overall, the positive impact of net working capital is therefore expected to be reabsorbed within the year. The strong cash flow generation covered capex and the payment of the interim dividend of 298 million euros, leading to a net debt for the period of 11.2 billion. Our net debt guidance for 2019 is confirmed at 11.7 billion, and this includes the absorption of circa 100 million of negative working capital. Let me now give you an update on Snam debt structure. In the first quarter, Snam tapped again the bond market, exploiting favorable market conditions by issuing its inaugural 500 million climate action bond with a 6.5 years of tenor and a coupon of 1.25%, representing the first climate action bond issuance in Europe ever. Furthermore, a new 135 million euro of EIB loan has been closed with a maturity of 20 years and a fixed cost of circa 1.4%. These two actions substantially cover a large part of the funding need of the year, while not excluding opportunistic pre-funding for 2020 maturity. Fundraising at negative yields remains a key source of treasury management optimization dependent on market conditions. As regards to that breakdown, at the end of the quarter, the fixed rate portion is 79%, in line with our three-quarter fixed floating debt 2019 guidance, which we confirm. The maturity profile is well spread over time, and our liquidity profile remains strong with 3.2 billion of undrawn committed credit lines. Maturity of medium to long-term debt remains circa 5 years, in line with our target. With reference to the share buyback program, we remind you that on the 2nd of April, the extraordinary shareholder meeting of Snam approved the cancellation of 74 million treasury shares held by the company without share capital reduction, and the ordinary shareholder meeting authorized a new share buyback plan for a maximum amount of 500 million euro and up to a maximum of 6.5% of the outstanding shares for a period of 18 months. Thank you for your attention, and we will now be pleased to answer your questions.
Thank you. As a reminder, ladies and gentlemen, if you wish to ask a question, please press star and 1 on your telephone keypad and wait for your name to be announced. If you wish to cancel this request, please press the hash key. Once again, it is star and 1 if you wish to ask a question. The first question comes from the line from Harry Wyburd from the Bank of America. Your line is open.
Hi, good afternoon, everyone. Thanks for taking my questions. 3 from me. So firstly on TAP, you mentioned it's now 87% complete. Could you remind us which month or quarter you expect it to commission and switch to a positive earnings contribution? And then secondly, Enagás obviously did a major transaction in the US, and I think in the past in the press you've been linked to deals in South America. I just wondered whether you could comment on your current appetite or interest in deals in the Americas and particularly North America, or maybe comment on your thoughts on what Enagás have been doing there. And then thirdly, you briefly mentioned that fully amortized assets had an impact on revenue in the quarter. I presume you've fully taken all of this into account in your guidance, but I just wondered if you could give us a bit of colour on how much of your pipeline network you expect to become fully amortized over the next couple of years, and what impact that will have on revenues. Thank you.
Thank you. So as it relates to TAP, we confirm what we said. We expect TAP to be completed by the end of 2020, so fourth quarter of 2020. When it comes to what Enagás has been doing, I mean, we don't comment on other peers' M&A, and I think, as always, we remind you what are our investment criteria, which we have applied consistently over the past 3 years, which remains the guide we follow every time we look at a possible external opportunity, comparing it to further investments in our core business, i.e. in our RAB. And I just remind you that over the course of the last 2 strategic plans, we have increased our CAPEX and our CAPEX plan effectively from 4.7 billion to 5.7 billion, which give you a sense of how much we focus on our core business in addition to be careful to what happens around us. But our RAB is the best investment we can make. The comment I made on the RAB exiting and the amortization was specific to a portion of RAB related to storage, which will be reabsorbed in the future as we have other assets that will come into operation, so it's a temporary effect. As we said in our strategy presentation, at the end of this plan, we will have approximately 9,000 kilometers that have of transmission pipelines that have more than 50 years of age, and the 4 that are beyond what is recognized by the regulator, which is one of the reasons why we can represent that we have a long-term visibility on our underlying RAB trend, which we showed up to 2030, exactly for this reason, because even absent need for new capacity, we will have the need to replace existing infrastructure, rejuvenating, effectively our RAB.
Okay, thank you.
Thank you. At the moment, we have no further questions. Just a reminder, it is star and 1 if you wish to ask a question, please. And we have 2 more questions now. The next one comes from Bartek Kubicki from SocGen. Your line is open.
Hi, this is Bartek Kubicki from SocGen. Just a question regarding the associates. The performance was excellent. 62 million. We know that 6 comes from the tax relief, probably around 10 comes from DESFA. If you can maybe elaborate what would be your guidance on DESFA for this year, because previously you were guiding on 10 per annum. Now it's actually met in the first quarter. And secondly, if we strip out DESFA and we strip out the tax relief, it's probably around 46 million of associates contribution versus 38 last year. If you can maybe tell us what actually performed that well, that the associates contribution is significantly higher than in the first quarter last year, stripping out the tax effect and stripping out DESFA contribution. Thank you.
We don't provide a quarter guideline by company, also in respect to the agreement we have with our shareholders. We do so on an annual basis. I think our guideline for the year factors a good contribution from our associates, but effectively the one-off from Teréga that I commented was not included in our expectations, so that's a positive surprise, although we knew we were going to have it, we just didn't know it was going to be 2019. When it comes to DESFA, I don't think we will change the broad indication in terms of relative size that we gave around DESFA. I think on DESFA there are two things. One, the market, the gas demand is going very well, and this hopefully, if continues, will give a benefit vis-a-vis historical results. And as I said, there is also some seasonality effect because the first quarter you clearly have more booking than in the rest of the year. So to put it simple, you shouldn't multiply it by 4 because some of this and a good part of the overall benefit that we described is going to be reabsorbed. On DESFA, the team and the company is having dialogue with the regulator. We expect a new regulation to come out, and the company is also working on the new CapEx plan, which will be including our next strategic plan. So when it comes to DESFA, we prefer to be more specific once all of these things will have taken place. And for the meantime, we confirm what we gave in the past. I mean, we're very positive expectation around DESFA, but this quarter is a little bit of a one-off positive performance, which we expect in part to be reabsorbed.
Thank you.
Thank you. Your next question comes from the line from Sara Picchini from Mediobanca. Your line is open.
Thank you. Hi, good afternoon, and thanks for taking my questions. The first one is on the joint venture that you recently set up with SGE for the development of the project in Sardinia. So could you please provide an update or how the works with the SGE will proceed? How do you see the investments in Sardinia and also a sense of from the government and the region about this project? And then the second question is on the other businesses, if you can provide a guidance or an indication of the contribution from the other businesses, especially after the setting up of the agreements on the biomethane and also on the gas stations. Thank you.
When it comes to Sardinia, I think we are on track with what we expected and indicate in our plan. We are working on the engineering phase. The permitting is progressing, and so we are simply waiting for the process to complete its course. And as always in Italy, things take quite some time. We have worked and have a dialogue with the regulator around the cost-benefit analysis, which is positive. So everything is on track and is progressing. What you have only seen is the creation of the NewCo that effectively will carry out the work in partnership with SGI. So there is nothing more than that at this stage that we can offer. Everything is confirmed as is on track. When it comes to the new business, I think we've been very busy in trying to integrate them into the Snam group first, as they were newly joiners of the group. And so this means that I don't think we are going to give you a guidance for the year, because I think the first year is going to be affected and influenced by some of those integration costs and the fact that we are actually developing the commercial strategy. So these businesses are in a commercial ramp-up phase. That though doesn't mean that we are not happy with the results. I think they are performing in line with the plan, and we confirm what we told you back in November and also in March in terms of how promising the energy transition space is. But it's a plan vision, the one we presented is not a quarter or a year, first year type of vision. And so we would want to stick with that. I mean, we remain very positive. We see opportunities, but we're very focused on making sure that this business grow in a solid and constant manner.
Thank you.
Thank you. The next question comes from the line from Enrico Bartoli from MainFirst. Your line is open.
Hi, good afternoon. First for taking my question. I have two of them. First of all, you mentioned the resolution for the new regulatory period, specifically for your businesses. If you can provide some additional comments, apart the beta, if there are other aspects that you like to align. In particular, I saw that the regulator introduced a remuneration for the work in progress. If this was included in your targets in the business plan, and if you expect a material impact from this recognition. The second one is back regarding DESFA. You mentioned the discussions regarding the new regulation. If you can share with us a bit the main points that are under discussion with the regulator. And from your comments, I have the feeling that probably there will be some upside in the CapEx potential from the company. If you can provide also some comments on this. Thank you.
Sorry, can you just repeat the last piece on the CapEx? I didn't quite get it.
From the comments you provided before, I had the feeling that probably the CapEx plan of DESFA will be increased compared to the current one. Is this a proper interpretation or not?
So first, let's start with the delibera from the regulator. I think that the delibera overall is in line with what we had in our plan. I think maybe with some very small marginal upside, but not negligible and not worth a comment, frankly. So I think the constant and constructive dialogue with the regulator means that by November we had a very good feel of what to expect, which effectively has been confirmed in March. When it comes to DESFA, what I wanted to say is that everything we discussed is related to the plan in the past up until now. It's related to the plan that was the privatization plan, the latest plan that DESFA did submit before coming into the perimeter with Snam and our partners. We are now working with the company to develop a new plan, and it is true that we see upside directionally. So yes, it's true that we expect CapEx to go up. I think it's early days as we just started this work with the team and with the company to give you any guidance, but directionally we expect CapEx to be more than what the old plan had, which clearly, if combined with a growing trend in terms of demand, are both positive signs and confirmation of the good move we made in making that acquisition. I think it's too premature. You will hear more from us at our next plan in November, and by then we will have full clarity on the new regulation and we'll have the new CapEx plan defined by the company.
Thank you.
Thank you. Your next question comes from the line from Jose Ruiz from Macquarie. Your line is open.
Yeah, good afternoon. Just one question. We saw the consultation paper for gas distribution last week, a proposal related to the cut of the useful life in order to avoid stranded costs. I was wondering if there is any read across for gas transport, not for this regulatory period, but for the future. Thank you.
Thanks. No, as we said in the past, our dialogue with the regulator around a plan to address the replacement of our old fully depreciated assets goes into the direction of establishing a framework where there will be incentive to potentially not replace fully assets that have more than 50 years in a constructive manner, both for us and for the system. I think we discussed at our strategy plan, we've made a stress case internally around how much volumes of gas you need for, as a minimum, for our network to still be fully needed and utilized. And that number came up from our technical team at 35 BCM, which compared to last year's market size of 75 BCM, give us, frankly, a very comfortable feel around the need and the strategic nature of our network. So I wouldn't read anything specific from the DSO consultation document. We will be, of course, working with the regulator beyond the 5th regulatory period in preparation of the possible introduction of TOTEX, which was confirmed by the delibera, in order to work also on alternative services and ways to look at our infrastructure and the values and the service that our infrastructure needs to deliver to the system. But we are kind of comfortable around the risk of stranded assets, frankly.
Thank you.
Thank you. And your last question for now comes from the line from James Brand from Deutsche Bank. Your line is open.
Hi, good afternoon. Just had a question, or it might be a two-parter, just on some of the debt issuance that you've raised and that you highlighted on slide 7. And it looked like you'd achieved, even though your current cost of debt is at a very impressively low level already, that you'd achieved even lower financing costs on some of the new issuance, including the EIB loan, which I guess always comes out at pretty preferential rates when companies borrow from the EIB, but that you'd also achieved a very good rate on the climate action bond. So I guess the two questions are that on the climate bond, I was just interested as to whether or not you felt that you'd got better terms on that bond than vanilla issuance because it was a climate bond, or maybe not, but be interested in that. And then secondly, for future debt issuance, do you think there's lots of opportunities to do similarly preferential debt? Can you access more EIB loans over the next few years, or maybe there's opportunities to do further climate bond issuance if that's preferential? Thanks.
Thank you for your questions. On the climate action, indeed, the reception by the market was incredibly strong, which meant a zero new issue premium, which is a way of saying that, yes, there was a very, very positive reception for a new instrument. As I said, this was the first ever climate action bond issued in Europe and the second in the world. And so the fact that we were able to achieve those terms and a zero new issue premium for something that was new can be seen as potentially leading to that type of treatment. Now, as we all know, the market environment is very much key in terms of when you do issue your instrument in order also to be able to optimize costs as this has been, in this case, has been the case. And the other thing that I would flag is that it did allow us to tap investors that we didn't tap before. And so, yes, over time, this was already, I think, a very good issuance because of zero NIP. It's frankly a way to say that it was better than other traditional financing forms. But also I think that the diversification over time will lead to this becoming a little bit more material. We did it not because we were in search of lower costs. We did it because ESG is part of our strategy and sustainable finance is part of our ESG strategy. And we try always to optimize our capital structure and at the same time be consistent with our overall group strategy. And this is confirmed also by the conversion of our sustainable loan, which we did last year, and which actually included a grid with KPIs based on which we could either have our margin upside or reduced by 2.5 basis points. And actually we achieved the target, which means that it will be reduced by 2.5 basis points. This will be done every year, and I think it gives a sign of how much Snam focuses and will continue to focus on these type of instruments, trying to combine obtaining better costs, but also increase the size and the scope of our sustainable finance. When it comes to EIB, yes, EIB is a fantastic and very competitive source of funding. Overall, we have 1.5 billion of EIB loans. It's very competitive both in terms of tenor and cost, and we will continue. We continue to have an ongoing dialogue with EIB, trying to have a pipeline of investments which can fall under this umbrella. This is done every year, and so we have an ongoing dialogue with them, and there may be other CapEx which we will be funding via EIB loans in the course of the year. it's on an asset-by-asset basis. So it's never a basket of not assigned funding. It's a CapEx-driven funding, so on every intervention there is a diligence on their side, and once that is complete, subject to usual negotiation, it can become eligible, and that's how it works. So it's an ongoing process, which we will continue to try and explore.
Great, thanks a lot.
Thank you. And as we have no further questions, I will now hand back to your presenter.
Thank you very much, everyone, for your attention and time today.